gold is now increasing as a tier one asset among central banks. So the ultimate long-term trend is gold has nowhere to go but up, never in a straight line. But compared to bubble assets, which go up and then tank, gold's not going to behave that way. And silver will rip when gold climbs. So many setups fundamentally, geopolitically, and just historically for gold and silver. And again, gold has still outperformed the S&P since 2000. It's still out. It's going to outperform the US dollar because any fiat currency is going to underperform gold if you hold it for the right reasons, wealth preservation and insurance against everything that's broken right now, except for the S&P. It can't outperform that, that's for sure. But if you're an investor and you're into wealth preservation, these aren't sales phrases. These are fundamental understandings of why you own precious metals.
Gold and the S&P 500 have both rallied to record highs in March. But an analysis provided by Jefferies suggests that the precious metal may perform a bit better than the index in the next month. Gold futures have rallied to fresh record levels, contributing to a gain of more than 6% month to date, with strength in the precious metal also coinciding with a rise to an all-time high for the S&P 500 index. MatthewPiepenburg is confident in gold's consistent outperformance compared to the S&P 500 and the US dollar, citing its value as an economic hedge. At the core of his analysis, Matthew firmly advocates for gold's sustained upward momentum. In the domain of global finance, he also emphasizes a critical trend as central banks are favoring gold over US Treasuries. The latest US Treasury International Capital (TI) data show that overseas investors held a near-record $6.68 trillion of US Treasury notes and bonds in November. But within that, central banks' stash was near its smallest since 2011. Right now, foreign central banks' holdings are down to around $3.4 trillion, and their collective footprint in the overall US Treasuries market has rarely been smaller. Gold's new high signals global central banks are likely accumulating the precious metal to diversify away from the dollar, as persistently large fiscal deficits threaten to erode its real value further and lead to more inflation. In Matthew's view, nations are increasingly accumulating gold reserves while decreasing their dependence on the US dollar. He points to the currency's historical dominance since 1971, but notes a decline in its trustworthiness. As a precious metals expert, Matthew reveals a surprising revelation about his bullish stance on precious metals and the stock market. Now we present the clips of MatthewPiepenburg's insights from his recent interview with Gold Switzerland by Von Greyers. Before we continue, please subscribe to our channel and activate the bell icon for timely updates.
When you see central banks marching towards gold and marching away from US Treasuries, the world is changing. Doesn't mean the war is over or the battle's over, but we're seeing tectonic shifts, as we said in Vancouver, in the trust and use of the US dollar. But it's important also to say that that dollar, like the Army of Northern Virginia, Robert E. Lee or Napoleon, doesn't die easily. It takes more than a headline or a clickbait headline to say that the world reserve currency is over. But there is, to Rick Rule's point, the hegemony is still there. The supremacy is not. And so the world is stacking gold and dumping treasuries and getting away from the US dollar because that dollar, which has been dethroned since 1971 without gold, and its inflation exported to all over the world and bullied every country from Venezuela to Germany to Japan to China and Russia, and now weaponized against Putin, just doesn't have the same trust. And to Alistair's point, well, what is the dollar backed by? Full faith and trust in the US Treasury in the US, but no one has full faith and trust. And his argument is essentially, as Russia has been saying for years, eventually we've got to move to a gold backed currency. Again, highly important, debatable point. My argument is they don't need a gold backed currency to have gold net settle their transactions. They don't need a gold-backed currency to basically have gold become more and more predominant in the net settlement of trades. And what I mean by that is, look, many of these countries in the BRICS don't fully trust each other. They just don't trust America at all, or the US dollar and its IOU, but they do trust gold. And they don't want to give up their own sovereign right to print as much local currency as they want to stay in power. But when it comes to trading and settling, they do trust gold. So even without a gold-backed currency that could be redeemable at, say, a central bank in Russia or China, they can just transact in dollars but hold in gold and go through the Shanghai Gold Exchange and other exchanges. And gold is slowly becoming that tier one asset that the BIS gave it credit for. It's happening anyway. And even like, again, with the petrodollar, you take away the petrodollar. I'm not saying that's happening tomorrow, but it is happening. Again, 20% of oil sold outside the US dollar. If we had mentioned that 3 years ago, they'd think you were a conspiracy theorist or a kook or crazy. And Saudi Arabia and the UAE are still pegged to the US dollar. Why would they want to kill the dollar? Well, they're not going to kill it yet until they have plenty of gold. And they're still going to trade in dollars because it's liquid. But to Alistair's point, they are death by 1,000 cuts. And Andy Schectman's right too, death by 1,000 cuts. They're slowly moving away from the dollar. To Brent Johnson's point, it's not going to happen overnight, but I think it's happening faster than Brent wants to believe. I think the geopolitics and the reality of money and the reality of foreign policy, these are all happening at such an incredible pace. You can no longer deny the trend away from the dollar. You can no longer deny the power of the BRICS plus partnerships. The fact that Saudi Arabia and the UAE are even in there now, it's extraordinary. It was a shock to many when I was in Vancouver being interviewed, and they said, because I'm a precious metals guy, I must be bearish. It's absolutely bullish right now in the stock market. And as bearish as I am, I have been bearish for years given these debt levels, but there are many golden bull opportunities in the risk asset markets, including March of 2020 when the S&P tanked by 30%, 36%, and the Fed announced unlimited QE. When you're getting a tailwind from the Fed, take it. What's unique about this bubble and what's uniquely dangerous about this bubble is it is no different than 1998, 99, 2000. I'll make my case as to why. I think the bulls would say, look, NVIDIA, profitable company. AI is different this time. Before the internet was different this time. Now, AI is really different this time. These are really profitable companies. When you look at the balance sheets, in particular, NVIDIA leading the way, AI is a transitional new direction. Although AI has been in the works for years. This is nothing new, but that's the narrative, in my opinion. And Microsoft and these other companies are good. Well, I will remind that fundamentals always drive bubbles. And in fact, during the dot-com bubble, and I remember my Bloomberg screen ticking away at names like Cisco or Qualcomm, certainly Microsoft even then, which, by the way, Microsoft has never recovered its highs from then. But I'm saying you can have very profitable companies and then get a bubble, because when there's profitable companies, of course, those are going to go up when they have advantages in cost and price and, these margin advantages. So they can be very profitable.
In his analysis, MatthewPiepenburg underscores the long-term perspective regarding silver's potential rewards. Simultaneously, he predicts significant breakthroughs for gold in the coming years, while advising investors to maintain a long-term perspective on silver's speculative appeal. Silver has been trapped in a range between $20 and $26 over the last year, but the precious metals fundamentals look bright for 2024, suggesting it could break out, according to experts. Demand for silver is likely to hit record levels in 2024, according to the Silver Institute, a not-for-profit association further acting as a bullish price driver. In a report published earlier in the year, the institute said global silver demand was forecast to reach 1.2 billion ounces in 2024, hitting its second highest level on record. With an eye on the future, Matthew states Bitcoin outflows are benefiting physical gold and silver, while predicting an increased demand for metals as fiat currency alternatives. Let's get back to the interview.
Egon often says it's not for widows and orphans. It's more volatile. It's that little speedboat, whereas gold is that juggernaut. It's the battleship that carves you through all the Sturm and Drang of the geopolitics and the debt realities and the market volatility and the paucity of good financial leadership and financial policy. Gold just keeps powering through. And yet, gold doesn't move in a straight line. Silver, though, when gold really does break through, we can talk why I think gold will break through significantly in the next few years, regardless if it doesn't go in a straight direction. When gold really does rip through, silver is like that little speedboat. And that's why it's more volatile. It's more of a speculative asset, still a monetary metal. Rick Rule, I think, probably said it best. And I'm not an apologist for silver. People have been hearing every year, this is the year. The ratios are going to, I'm not here to tell you, it's because of Indian demand, or it's because wholesale demand, or it's because the European refineries are tight. They have no more silver left. It's this year. It's going to rip. It may. I don't know. But as Rick Rule said, and you got to keep this in mind, your investment horizon, if you're an investor as opposed to a speculator in precious metals, has to be long and patient. But as Rick Rule said, silver rewards extravagantly but infrequently. And for the silver stackers, I can understand some of them. I wish I was in Bitcoin, man. I'd be up 50%. What am I doing with this silver? Again, I get it. I'm not here to apologize for it. Bitcoin, for a lot of reasons, has some real headwinds and tailwinds that silver doesn't have. I don't know if I have time to get into that. But again, if you're an investor, you're agnostic. I mean, I have clients in 90 countries. No one calls me and asks me about the gold price or the silver price. Not one of them. And these are high net worth investors. You'd be surprised who some of them are. They don't care because they just see the long game. I realize that a lot of your audience doesn't have the patience or they need liquidity now, or they need something to happen now because things are really tough. I'm not trying to be disparaging of that, but if you're an investor and you hold silver, you have to be very patient, and the rewards will be extravagant because gold will move, but silver will rip. The question is, like in any asset though, is what's the top or what's the ratio where you sell or where you continue to hold? That's up to each individual investor. No, there is a strong case to be made with both gold and silver, as we're seeing, open interest outflows in the COMEX right now. 40 million ounces just out of the gold market, for example, in the COMEX. Most of it going to chase this concentrated, now centralized ETF for Bitcoin. I'm fine with that. Anti-fiat, they're leaving the COMEX. It's actually very, very good for gold and silver because all this levered fiat gold in the COMEX and the LBMA markets in London, now these levered parties, these counterparties, really have to come up with delivery to get these outflows, these net outflows. They don't have enough physical gold. So when all this money goes into Bitcoin to chase this top, to chase this bubble, and Bitcoin may or not be a bubble, we can get into that. That means there's going to be less physical gold in the COMEX, less physical silver in the COMEX. As Andy Scheckman and others have said better than me, there's just no physical gold and silver there. And when this euphoria comes back to reality, the COMEX is going to come up with some gold fast, and they can't lever it after Basel III. So there is so many setups fundamentally, geopolitically, and just historically for gold and silver. And again, gold has still outperformed the S&P since 2000. It's going to outperform the US dollar because any fiat currency is going to underperform gold. If you hold it for the right reasons, wealth preservation and insurance against everything that's broken right now, except for the S&P, it can't outperform that. That's for sure. But if you're an investor and you're into wealth preservation, these aren't sales phrases. These are fundamental understandings of why you own precious metals. If you're a speculator, gold is not sexy. Silver will be sexier, but it certainly isn't sexy right now. And I get the impatience.
Overall, both metals present compelling cases for investors, with gold offering ultimate stability, while silver presents opportunities for patient investors awaiting its rise. Gold prices garnered huge profits this year, reaching successive record highs past $2,100 and opening the door for even more gains. J.P. Morgan's analysts expect gold prices to scale $2,500 an ounce this year, based on MatthewPiepenburg's analysis. How should investors balance holding gold as an economic hedge and investing in traditional stocks for potential portfolio growth? Share your thoughts in the comment section below. If you find this video informative, please support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.